Hi, everyone. Welcome back to the Property Finance Podcast. And as you'll see, the phone is back in the hand. So following the success of our little AI development finance interview, I thought I would go again, but this time around bridging finance. So I've got a list of 30 questions that AI have asked me about bridging finance, and I'm going to go through each one and answer them best I can, and hopefully give you as much content around bridging finance as possible. So the first question that ChatGPT has asked is, what is bridging finance and how does it work? So we're starting really simple, right down for the basics. So bridging finance is essentially, it's there to bridge the gap between point A and point B. So that may be an auction purchase, it may be buying a property that's unmortgageable. So point A being it being in its unmortgageable state, point B being you getting it to mortgageable and then refinancing it. Could be land without planning that you then intend to go and get planning on. All manner of different uses, but essentially it's there to bridge the gap between point A and point B. Second question is, when is bridging finance typically used? So we've kind of covered this already, I guess, in terms of a few of the suggestions, but I would say any kind of refurb normally is where you would use a bridging loan. Auction finance is one of the biggest uses of bridging finance because of the speed required. So most auctions are 28 days. Bridging finance allows you to complete these within those 28 days. Anything where you're purchasing land without planning, or maybe a commercial building to then go and get permitted development on, all manner of different uses, but they're kind of the main ones that we see. Then the third question is, what are the key differences between bridging finance and traditional loans or mortgages? So very simply, bridging finance is considerably more expensive. It is considerably more flexible. So bridging finance allows you to go against market value with some lenders, as opposed to mortgages, which are always against purchase price. It allows essentially unmortgageable properties to be purchased, which a mortgage wouldn't do. It's bridging finance is very short term, whereas mortgages are longer term. So they're kind of the key differences, I guess, between all of those. I guess as well, mortgages, you're paying for them monthly, whereas bridging finance, you can retain or roll up the interest, so you haven't got those monthly expenses as well. And then the last question on this little section here, so question number 4, is, what are the main types of bridging loans? So I would say they fit into probably a couple of different categories. So I would say the first one is refurb bridges. So these are bridging loans where you just want a contribution towards the purchase, and then you're going to cover the refurb cost yourself personally, and then refinance onto a buy-to-let once you're done. You've then also got your auction bridges, you've got your sales bridges as well. So bridging loans that you would do maybe at the end of a development to then allow you time to go and sell the properties. You've also then, in terms of types of bridging, I guess you've got your retained interest bridges, which is they'll lend you 75% and then they'll take the interest off up front. You've got your serviced bridges, they'll lend you 75% and then you pay for them monthly. All different kinds of types. But I would say in terms of bridging loans, they're kind of the main ones. Then question number 5, which this little section is all around eligibility and requirements. So question number 5 is, who qualifies for bridging finance? I guess my answer to this is I haven't found anyone who doesn't yet. So in terms of credit profile, there isn't really a credit profile for bridging finance. It very much is project orientated. So as long as the deal makes sense and as long as the exit makes sense, they'll look to lend. I would say on bridging finance, where you're bridging on something and you've got poor credit history, they're obviously going to be looking for you to sell it rather than retain it, because chances are you wouldn't get a mortgage at the back end. So they're going to be looking around those exit strategies as well, just to make sure that they're okay. The only one that we are struggling with slightly at the moment is insolvency. So where people have had bounce back loans and have then closed the company down, made it insolvent, that obviously raises a bit of a red flag with the lenders. However, we still have managed to get terms, albeit they're not the cheapest. In terms of foreign nationals, again, bridging finance is fine for most of those, as long as they're coming from countries that aren't listed as being high risk. So most of the African countries, China, Russia, etc., are all on that high risk category. But as long as we're talking about maybe foreign nationals from Switzerland, France, Germany, Italy, all of the kind of main European countries, they're normally okay. We've had a few from America as well. Then the next question is, what types of security are needed for a bridging loan? So there's 3. So if you're purchasing in a limited company, those 3 are going to be the first charge over the property, or second charge if you're doing second charge bridging, but normally a charge on the property, a personal guarantee from all directors and shareholders over 20%, and then a debenture over the limited company. So debenture being a fixed and floating charge over all assets within that limited company. If you're bridging in your personal name, it's a charge over the property. That's pretty much the security that they take. Then question 7 is, can I get bridging finance with poor credit or a complicated financial history? The answer is yes, you can. But the longer answer is yes, you can, but it's going to be a bit more expensive than it would be normally. So for clean credit, for a decent deal, everything else, bridging is normally around 0.8 to 1% a month. With poor credit, you're talking 1% to 1.2, 1.3% a month. So it does add about 30% to the cost of the loan. In terms of what I would define as poor credit or a complicated financial history, you're talking missed payments, maybe a historic bankruptcy, maybe some small CCJs. If you're starting to get into large CCJs, if you're getting into recent bankruptcies, if you're dealing with insolvencies, that is going to be far more complicated. And it may be that you have to add further properties into the deal in order to bring the loan to value down, or it may be that you're paying 1.5% a month if that credit history is really, really bad. And then the last question under this section is, what documentation is typically required for approval? So we kind of covered this in the development finance one, but to get a bridging loan AIP, normally all we need is the address of the property, probably need the what you're buying it for, what it's worth now, what the rental's going to be, etc. Just some really basic numbers that will normally get you to the AIP stage. But to get from AIP to offer, you're going to have to fill in, obviously, the application form for the lender. We may need bank statements. For example, if you're doing serviced interest, they want to see that there's some cash coming in to cover those monthly payments. Might need to see 3 months worth of wage slips as well, potentially for that as well. Things like EPCs, title plans, that sort of thing. But it really is quite a small amount of information that you need in order to get a bridging loan sort of across the line. When it gets to the legal requirements, again, even they're not too onerous, but searches, standard inquiries, really isn't a lot when it comes to bridging finance. Then probably the most interesting section, which a lot of people are always interested in, which is the cost and fees. So question number 9 is, what are the interest rates for bridging finance and how do they compare to other loans? They're more expensive is probably the simple answer. But in terms of how interest rates compare, so on bridging finance, you're anywhere from 0.8% to 1.2% a month. That's kind of the variance between the two. That's at full max loan to value. Obviously, if you bring that loan to value down, obviously the interest rate is going to come down. Compare that to a buy to let. A buy to let's probably setting you back 4.5%, 5%. A commercial mortgage is probably setting you back 5.5%. HMO mortgages 5.5%. SA is probably setting you back 6%. So to then go to bridging, which is going to be anywhere from 10% to 14.5%, it's significantly more expensive. But the fees in terms of arrangement are fairly similar. So most commercial mortgages, buy-to-lets, a 2-3% arrangement fee, which is the same as a bridging loan. And then, funnily enough, question number 10 is, what fees are associated with bridging finance? So arrangement fees, normally about 2%. Exit fee could be anywhere from nothing to 1%. Broker fees are normally nothing to 1%. Legal fees are probably going to be a couple of grand. Valuation is going to be a couple of grand. Depends on the size of the property. Might only be a few £100s, depending on the size of the property. Also, the other thing with bridging finance as well is that you could do AVMs, which is automated valuations, which essentially is a desktop valuation. So you might only spend a couple of £100. We've actually just completed on a bridging loan today, the day of recording this, where we didn't even have a desktop valuation done. We had a digital valuation, like an AVM done, but it was, I think, £20, and the lender actually covered the cost. So yeah, that was pretty handy. Then question 11 is, are there any penalties for early repayment? There's no penalties for early repayment, but the two things to bear in mind is every lender is going to have a minimum interest period. So it might be 1 month, 3 months, 6 months. That is the minimum period of interest that they're going to charge. So if you have a lender that's got a 6-month minimum interest period and you repay after month 3, you're still paying 6 months worth of interest. They may also have an exit fee as well, but that exit fee is payable, if there is one, at any point during the loan. So there's no early repayment fees, but obviously you've got minimum interest and exit fees. Then question 12 is, how is interest charged, monthly, upfront, or rolled into the loan? Well, it's any one of those three. So monthly, that'll be your serviced interest. So some lenders will allow serviced interest. Upfront is retained. So that's where they lend you 75% loan to value, but then work out, let's say, 12 months worth of interest off that and then deduct it off. Or you've got rolled, which is where they'll lend potentially 65, 70% loan to value and then roll the interest on top for the 6, 12 months, however long you've got it for. The next section is usage and flexibility. So this will be the last section of this part. But question number 13 is, what can bridging finance be used for? So we've kind of already covered this question already, but auctions, refurbs, land without planning, commercial units without PD, that kind of thing. Anything where you need quick finance and finance on something that isn't mortgageable in the normal way. Question number 14 is, how quickly can I access funds from a bridging loan? Really does depend on the team that you've got around you. The quickest one we've ever done is 4 working days. But I would say on average, you're talking 4 to 8 weeks. If you've got a good solicitor, and this is kind of really, really key, your solicitor needs to be good, because if they're good, it'll go so much quicker. And it obviously depends on availability of valuers and things as well. But normally, as a rule of thumb, 4 to 8 weeks is probably where you're looking for. And then question number 15 is, can bridging finance be used for personal use as well as commercial purposes? So the market we're in is unregulated. So anything within a limited company is unregulated by the FCA. Bridging finance or any finance for business use is unregulated. If you want to use bridging finance for personal reasons, so paying off personal debt, or you want to take the money into your personal account and then go and spend it on a holiday or a car or something like that, that is regulated bridging finance. And for that, you would need to speak to a regulated broker and go to a regulated bridging lender. But in theory, yes, it could be used for personal use as well as business use, but it just puts it into that regulated market as opposed to unregulated. The other thing as well is that any bridging lender that's got any kind of moral compass is going to be questioning what you're using the funds for, and obviously checking that you're not making a poor financial decision. So I would say bridging finance, keep away from for personal use, but it's completely up to you. But definitely you need to speak to a regulated lender and a regulated broker. And then question 16, very similar to question 15, which is, can I use bridging finance to cover unexpected costs such as renovations or business expenses? Slightly different in the sense of this is talking about business use, but yes, you could use it for renovations. You could use it for unexpected business costs. You could use it for anything business related, as long as that bridging loan is giving you some kind of benefit within the business. Then yeah, I would say, not that this is advice, but I would say bridging is a good use for those unexpected costs. And that brings us to the end of part 1. There are another 14 odd questions to go. So join us for part 2, where we'll carry on going through these questions from AI all about bridging finance. Thanks for listening. Catch you on the next one.